Long term, yeah, Bitcoin's going to do great as the digital gold. Midterm, I'm still skeptical if it doesn't go back down to 20, maybe retest those lows or even go lower. There's still a chance we could test the 15,000 level, maybe 12, 13, maybe 10 if in a worst case scenario. But my long-term outlook on Bitcoin is like about as rosy as anyone out there, the maxis or whatever. I do think it's going north of 100,000, probably within the next 5 years, maybe even higher than that. Be smart about this stuff, guys. Again, real wealth is built through diversification. The reason that is the case is because, and I can verify this from my early years, is because if you put all your money in a trade, you might win once, twice, 3 times, and then you blow up your account on the 4th time, and you're back to zero.
In his daily game plan, seasoned trader Gareth Soloway, drawing from his 20 years of experience, thoroughly analyzes charts for both Bitcoin and gold. He suggests that Bitcoin has the potential to reach $100,000 in the coming years. However, he advises caution when it comes to gold, given its negative trend. The market has been eagerly waiting for the U.S. inflation data that could set the stage for future rate hike moves of the U.S. Federal Reserve. Meanwhile, the latest data seems to have fueled the confidence of the market participants, especially in the crypto market, as evident by the positive momentum in the industry. The U.S. core inflation eases to 3.7%, while the global crypto market cap hits $1.08 trillion, with Bitcoin and Ethereum on the rise. Bitcoin is displaying signs of bullish momentum, aiming for the $30,000 threshold following weeks of consolidation. Given the current price movement, investors are eager to identify potential signals for the next rally and a possible accumulation zone. In the chart analysis, Soloway expresses doubt about the midterm outlook, suggesting that Bitcoin might drop to $15,000, $12,000, or even $10,000 in a worst-case scenario. On the other hand, his long-term view for Bitcoin is very positive, anticipating it to exceed $100,000 in the next 5 years, or potentially even more. The price of Bitcoin surged above $28,000, sparking bullish predictions for the remainder of October. October is crypto parlance for October, typically being a bullish month for the price action of Bitcoin and other cryptocurrencies. According to data from CoinGlass, October has only produced negative monthly returns twice since 2013. According to Soloway, traders should avoid fixed bullish or bearish positions and, instead, stay flexible and adjust to changing market conditions. Let's direct our attention towards the video.
Bitcoin broke out yesterday. So this is what I mean when I say, like, as a trader, you never want to be a bull or a bear. You have to be, and I should say perma bull or bear. You have your short-term outlook, your mid-term outlook, and your long-term outlook. All right, so let's talk about it. My short-term outlook when we were up here was bearish. We all know that. I said 31,000, 30,000 area, we're going to fall back from it. Okay, short-term outlook, correct. Now, my mid-term outlook continues to be skeptical. My midterm outlook continues to be there's still a chance we could test the 15,000 level, maybe 12, 13, maybe 10 if in a worst case scenario. But my long-term outlook on Bitcoin is like about as rosy as anyone out there, the maxis or whatever. I do think it's going north of 100,000, probably within the next 5 years, maybe even higher than that. But let's talk charts now. Let's go to the near term, because the near term was negative. Now the near term has flipped positive and again, this is just for a short-term outlook, but we remember this trend line here to here, right? And then it hit multiple times here and it hit here. Remember the thought process of trend lines. When you have a resistance line, the more you hit the resistance line, the weaker it becomes until you finally break through it, right? The door thesis or the door analogy, right? If I ram into a door, the more I hit that door, the weaker it becomes. Eventually it breaks down. That's the thought process here. So we had a hit here. We had multiple hits here. We had a hit here, and finally yesterday we broke out right there. Now, as long as we hold above this level, all of a sudden it goes from a negative bias to a short-term positive bias. What's your short-term target? Let's talk about it real quick. This pivot high around 28,100 is your short-term pivot high right there. If it gets through that, it has a shot at this trend line here. All right, so again, this is the key. Perma bull, perma bear doesn't really matter. You don't want to be that. You want to, if you're a trader like myself, as a swing trader or a day trader, you're looking for the little signals that will tell you that. And by the way, I thought this down here was a really interesting pivot point because up until this point, Bad news, good news, we had the Ripple news here and we reversed it the next day. We had the Grayscale news here and 2 days later we reversed. Here we broke down and the next day we reversed. That was the first time we had a bullish reversal versus bearish reversals. So again, that was a small positive. Then we went up, we hammered, and finally broke out. So right now, your bias on a short-term Bitcoin move is to the upside to about 28,000, 28,100. We'll see again if we get through that point or not. Okay, now again, midterm for me, I still don't trust the stock market. The stock market to me looks like a house of cards. The economy looks like a house of cards. Long term, yeah, Bitcoin's going to do great as the digital gold. Midterm, I'm still skeptical if it doesn't go back down to 20, maybe retest those lows or even go lower.
After an impressive 11-week bullish streak, the US dollar index, which reached a peak of 106.84, is now at risk of ending this streak. On Friday, it dropped as low as 105.5. With the weak dollar, a surge in gold prices was anticipated while the collapse in gold prices continued on Friday with the price down to $1,850. On the daily chart, gold prices have continued to make further downside progress after confirming a breakout under the rising trend line from February. Soloway advises that when traders have too much leverage, even small price changes can make them react emotionally and leave trades too soon. To prevent this, it's essential to handle your position size carefully. Let's direct our attention towards the video.
Gold yesterday had a surprisingly big down day. I was a little surprised since the dollar was weaker. I love this reversal today, though. Gold again reversing up. This is still, again, pierced the line. How many people got whipped out on gold yesterday, do you guys think, right? Pierced to the downside, people got whipped out, and then price reverses. I mean, this is what happens, guys, and this is why position size is so key. When you're over leveraged, little pierces, your emotion is going to freak you out. It's going to make you exit the trade. When you have minimal positions and you're diversified, you allow things to breathe and you don't focus on the short-term little pierces. Oh my God, it pierced. Oh, instead you're like, wait, what is the bigger picture on gold? What is the bigger picture on this? And by looking at that, you're not going to get whipped out. It's when people over leverage. When people hear me say, oh, I like this, and they're like, well, in that case, I'm going to go all in. That's the stupidest thing you could do. Really, it literally is. Because you will get whipped out of the trade and you will take losses. When you do proper share size, you're able to combat that. And again, we see that on gold today. Gold is soaring today. Beautiful bounce. My guess is that probably, interestingly enough, right? Let me zoom in here a little bit. All right, let's go into this here even a little bit more. My guess, and again, I could be wrong, my guess is this was the last whip out to scare the bulls until we get a breakout. That's my guess. Just from history of trading stuff. Now, again, does that mean you go all in on gold? Hell's no. Don't be an idiot. Manage your position size. Be smart about this stuff, guys. Again, real wealth is built through diversification. The reason that is the case is because, and I can verify this from my early years, is because if you put all your money in a trade, you might win once, twice, 3 times, and then you blow up your account on the 4th time, and you're back to zero. The real key is being able to mitigate, knowing you're going to have losses and mitigating those losses because you're not over allocating into those positions. That is really absolutely the key.
During times of economic and political crisis, Bitcoin has been promoted as a safe haven asset, similar to gold. Proponents believe that because of its decentralized nature and limited supply, it is an appealing store of value when traditional assets, such as fiat currencies or stocks, confront uncertainty. Do you agree with Gareth Soloway's long-term outlook for Bitcoin reaching $100,000? Feel free to share your thoughts in the comments section below. If you found this information valuable, please give it a thumbs up and consider subscribing to our channel to stay informed with the latest news and videos. Thanks for joining us.